Alrighty guys, let's get into that. So first off here, the overall earnings report was a D minus, okay? It was a D minus, very, very bad. So in terms of automotive revenues, only up 1% year over year. For Tesla, by Tesla standards, this is a disaster. I mean, to be quite frank, automotive revenues up 1%, like, nah. Energy generation and storage revenue was decent. It was up 10% year over year, where the exciting part of Tesla is right here. Services and other revenue was up 27% year over year. That's a real growth engine, obviously, for the company. And I look at and I've been telling you guys this for a while, the services business of Tesla is being very disrespected like Apple's services business was back in the day. And I don't think it's going to be like that forever. And I think, if we fast forward 3-5 years in the future, I think everybody's going to talk about Tesla and the services business just as they do nowadays in regards to Apple services business. Now, total revenue is up 3% year over year. I mean, it makes me laugh because it's so bad for Tesla. If this was 3M, they'll take 3% growth, but not for Tesla. Total gross profit was down a whopping 23%, 612 basis points, which is just a fancy way of saying 6.12 percentage points. Operating expenses was up 27% year over year. Yeah, you don't want to see your operating expenses up that much when your revenue is hardly going up at all, right? If revenue is up 50%, 60%, then you say, okay, operating expenses up 27%. But yeah, 27% up on a 3% up revenue number, disastrous. Income from operations fell almost 50%, down 47% year over year, rough. Operating margin was down 784 basis points. Once again, that's just a fancy way of saying 7.8 percentage points. Adjusted EBITDA came in down 27%. That was down about 652 basis points. Net income looked like it was great, right? It would look, oh my gosh, how did net income up so much, 115%? But that was because of a one-off situation. Don't get excited about that at all, okay? The reality is not that good. Net income on a non-GAAP basis, which is more important to look at because that takes out the one-off there. It was down 39%. EPS on a non-GAAP basis down 40%. So yeah, I mean, income statement-wise is pretty disastrous, right? The good news is they're still profitable. The margins are still, pretty healthy compared to average companies. But for Tesla standards, this is bad. This is a D for disaster, okay? Net cash provided by operating activities up 33%. That's great. CapEx was up about 24%. We know the company's spending a lot right now for future growth. Even though the growth isn't exciting today, it will be in the future. Free cash flow up 45% and cash and cash equivalents up a whopping 31%. We'll speak about that a little later on, okay? Now, here's, they show you obviously kind of what they can do as far as capacity here. But I thought this was really important here. This is market share of Tesla vehicles by region, right? The important thing to understand about this is even the Tesla we look at today, and it's like, wow, they've become such a big company. They're on their way to making 2 million plus cars likely next year, all these sorts of things. It's very exciting, but you got to understand, Tesla's still a very small player in the market. If you look at their market share in US and Canada, I mean, we're roughly 4% market share. Europe, we're still a super small player, under 3%. China, we're a little over a 2% player. Okay, so we're still actually the small guy. We're still, if this is a David and Goliath situation, we're still the David in this situation. That's the fascinating thing, even after all this growth over the years, right? Now, these were two big things. One is cumulative miles driven with FSD, full self-driving beta, in the millions, and in the millions of miles. And obviously, it's an exponential increase in the past, I would say, 9 months specifically. So that's big. That's going to help huge when it comes to the autonomous taxi network opportunity and full self-driving in general, right? And then I thought this was extremely important. Cost of goods sold per vehicle is we've had a consistent drop quarter after quarter after quarter after quarter for many quarters in a row. So that's good news. That could be messed up maybe by Cybertruck. So do keep that in mind. But overall, that's something I do like to see, right? Now, these were two big things. One is energy storage. It's never been a business that's really excited me personally as a Tesla shareholder. However, I'm pleasantly surprised with this growth in this business overall. So definitely a thumbs up from me. This right here is the most underrated, overlooked slide, could say unequivocally out there, okay? This is the granddaddy of them all, to me personally, okay? This shows you services and other gross profit. Now, for the longest time, this was a epic drag on Tesla's business model. 2017, about $200 million plus, we can call it gross loss. 2018, almost $500 million gross loss in services and other category. 2019, over $500 million. Then they started to make some strides in the right direction, right? And then we went positive last year. Now look at this explosion in the upside here, up to nearly $500 million in the plus when it comes to services and other gross profit. Folks, this is going to be heading to the billions of dollars, in my opinion, the billions of dollars. And so you're just talking about going from a massive drag on the business to a massive help for the business model and the profitability overall. And so that right there, folks, I'm telling you, so overlooked, and it's the most underrated thing, in my opinion, in regards to Tesla story right there, okay? Now, you'll be flipping my flapjacks. Cash loads to the sky in regards to Tesla. Look at this, guys. Look at this. They're getting close to $30 billion in cash. Over $29 billion in cash equivalents, and investments in this latest quarter, folks. What a difference. What a difference. I remember the Tesla I was investing into and taking a risk in back in the day was a Tesla that had a horrible balance sheet. I don't want to say horrible, but it wasn't very good. It was bad. You know what? I'll put it in the other case. It was kind of a bad balance sheet like all the other automakers. And now this company has put their balance sheet into a situation where it's one of the strongest balance sheets you'll find out there in the S&P 500. It's certainly the strongest balance sheet you'll find out there versus any other traditional automakers. Look at Volkswagen, Toyota, General Motors, Ford. Look at all those guys' balance sheet and look at Tesla, and you'd be like, all those guys would change positions with Tesla in a heartbeat. I can tell you that much. And so I'm just, thrilled with that. And I think if you're looking for some good news in these earnings, you have it right there, folks. I mean, we're going to head to well over $30 billion in cash equivalents, and investments there. So great. Now, check this out. Model Y, best-selling vehicle globally in 2023. I mean, that's incredible, right? The best-selling vehicle, and this is still with Tesla being a small player in the market, and yet they had the best-selling vehicle globally in 2023. Incredible. The Model 3 is now available globally. I think it looks beautiful. I love that refresh they did. This, I thought, was massive. Fremont factory produced nearly 560,000 vehicles in 2023, an all-time record. Now, the reason I think that's huge is if you've been in the story for a long time like I have, as in years, you remember when there was a debate about Fremont was going to be maxed out at 250,000 vehicles a year. That was the old thought process many years ago. Oh, Tesla could never produce more than 250,000 vehicles a year out of Fremont, right? Then the goalpost got shifted. Then it was 400,000. Oh, Tesla will max out at 400,000 a year in Fremont. Then it was 500,000. And here they are last year, 560,000 vehicles out of the Fremont location. Incredible. I called this. I knew this was going to happen. Tesla wraps, right? I knew it was a matter of time. This is a huge money-making opportunity, huge profit opportunity for Tesla. This is genius. They need to offer wraps on all their vehicles, because guess what? Check it out. Okay. Guess what? Wrapped. My Plaid right there is wrapped. The Model X right there is wrapped. Almost everybody I know that has a Tesla ends up wrapping their Tesla. And so Tesla's just missing out on a lot of easy money by not offering wraps, just to be quite frank with you guys. So huge money-making opportunity for Tesla there, and their price points are pretty expensive from what I saw. It looks much more expensive than if you were to get it wrapped at another place, but supposedly they're supposed to be higher quality and those sorts of things. So big money-making opportunity for Tesla there, and that will help that services and other category out, okay? Now, my opinion on the numbers overall, blah. I mean, nothing to be very excited about. The only thing to be excited about, I thought, was the cash and cash equivalents. And the only other thing to be excited about was margins came in better than feared, right? It could have been worse. And so outside of that, nothing else to be excited about. Revenues up 3%. That's a joke for Tesla. Income from operations being down, 47% or whatever. It's insane. So yeah, nothing to be excited about, but that was to be expected. No one expected good numbers. I told you guys I was very fearful of them missing analyst projections. Sure enough, the company missed analyst projections. So nothing I didn't see coming in regards to that whole situation, okay? This is pretty big, and this kind of went a little bit on the DL, but I thought the CFO did a great job of kind of talking about this on the conference call, that now the $7,500 can be taken off at the point of purchase, which is big because now you don't have to wait till the end of the tax season. And I think that's big for consumers. So I'm excited about this. There are still some hoops you got to jump through to make sure everything's correct on the backside of this. But I think there's a step in the right direction. And I'm excited there because it's going to make the vehicle look a lot less expensive right from the go if somebody goes to buy a Model Y right now or something like that. So I thought that was big. Elon says in the second half of 2025, he's expecting the Model 2, the next generation vehicle, whatever we want to call it, to go into production. Now, there's a lot of debate on what this vehicle is going to be, when they're going to show off this vehicle, all those sorts of things. But he's talking about second half of 2025 going into production, which would mean they would have to show off this vehicle at the end of this year and start building the hype around it and pre-sales and all those sorts of things if they're actually going to get it into production the second half of 2025. So, there's a lot of debate about it. I've always thought it should be a two-seater vehicle. There's a lot of people that debate me on that all the time. I think that's what it's going to be. I think that's what it should be. By the way, if they call it Model 2 and it's a two-seater, it's like genius branding. But at the end of the day, drive on any highway in the United States of America and look inside the cars of how many people are inside the cars. You're going to find one person's in there. It's the driver. And a bunch of seats are open. And maybe there's one other person that's a passenger, and the rest of the seats are open in a 5-seat vehicle. And so I think it makes the most sense if you want a real vehicle that could be massive in terms of sales volume and in terms of the robotaxi opportunity, make it 2 seats. Make it 2 seats. I'm telling you, that's the smartest way to go in my personal opinion. And I hope that's the way Elon and the team's going here, is a 2-seater vehicle. I think it'd be by far and away the best. And on top of that, the other thing that's ingenious about that is, guess what? You're going to need way less batteries for a vehicle like that. And it's going to be all about cost. At the end of the day, if Tesla had a vehicle that was in the market brand new for $20,000, it's selling insane. But they don't. And so you'd be able to cut down on cost so much. You'd be able to get more range because it'd be smaller. And it's all most people need, just to be honest with you guys. So, man, we'll see. We'll see what happens there. But I can tell you, if they came out with something that's $25,000, it's a 2-seater, oh my God, even I would buy something like that as just a little commuter vehicle around. Like, why wouldn't I? Like, of course I would, even with a family, because I'm like, I already got a family vehicle. I already got a Model X that I could drive the family around in. What about all the errands I run in place I go by myself all the time? Like, that would be perfect. So we'll see what happens with that. But they're talking about the second half of the year. In one earnings call, Tesla removed itself from the Magnificent Seven, says Kramer. So looking forward to getting that one. Man, I never record a video this early in the morning. This is crazy.
After today's 25-point drubbing, Tesla is out of the Magnificent Seven. Done. Stick a fork in it. We all know it. People are just afraid to say it. Maybe they worry Elon Musk has something up his sleeve, or maybe they're just scared of the guy, or they just like saying Magnificent Seven all the time, although I bet most of the people have never even seen any of the 3 cinematic iterations. I do not have such trepidation, people. That's because in one earnings report and conference call, Tesla removed itself from this elite group by itself. I think it's a teachable moment about what qualifies a stock to be a member of the Magnificent Seven, which sadly is no more. Let's start with the need for growth. You have to have it. You got to have it to be magnificent. But what did Tesla say last night in its outlook? Quote, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, end quote. You can't stay magnificent with a notably lower growth rate. That's like bringing a knife to a gunfight. And if you remember, the guy with the knife doesn't make it to the end of the movie. Second, a big reason why we adore the Seven is that they have very little cyclicality. We don't want to hear about interest rates or stretched consumers or incentives and tougher monthly payments. But we heard Elon Musk talking about affordability, for heaven's sake. Listen to this, quote, we have lots of people who want to buy our car but simply cannot afford it, end quote. You're never going to hear that from any of the other Magnificent Seven.
So before we go further here, okay, it's important to understand that before the Magnificent Seven, CNBC used to have another name for a group of stocks. It was something like Manga or something like that. Before that, it was another name that now it's escaping me right now, but it was another name of a group of stocks. But then they took Netflix out of it. So then it wasn't Netflix anymore. And that got taken out. And then Netflix stocks has actually performed tremendous over the past year and a half. Then they took Meta out for a while, and then now everybody wants to own Meta stocks, so that's in the Magnificent Six, I guess we can call it now. So it's just funny, they'll take these stocks out, but just because they take them out of whatever their little sayings are for the moment. it doesn't mean they're gone for good. And it doesn't mean those stocks are going to perform bad, because actually they could perform tremendous in the future, as Meta did when it got taken out, as Netflix did when it got taken out. So something to keep in mind.
Hostage to the broader economy like Tesla. In the old days, I always loved that Tesla didn't have to advertise. However, Musk now talks about digital campaigns, audience education. Sounds like selling cars to me. Third is leadership. No matter what, I always feel that the people running their respective companies are committed to the enterprise and committed to you, the shareholders. They are all in. Musk, though, actually makes it clear that he's unhappy with the status within Tesla, and he might not take the company to the next level unless he has more control. He says he sees, quote, a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power, end quote. But then Musk goes on to suggest that he has, quote, so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm, end quote. He wants more voting power, maybe almost double the amount he already has, getting him 25%, possibly via a dual class of stock, too. Oh, and how about this reassurance he offers if he gets more stock, say up to 25%? And again, I'm quoting, that's not so much that I can control the company, even if I go bonkers, end quote. Oh, thank heavens. You don't have a Magnificent Seven CEO who might go bonkers. And more important, what if he doesn't get his 25% vote?
Why'd you ever put him in the Magnificent Seven in the first place? Oh, because the stock was doing good for a while there? Like seriously, this is the same Elon Musk we've known for years. Actually, it might be a more tame version. The same man that said 420, taking the company private in the middle of a trading day. Same man that said a lot of crazy things, and now all of a sudden they're like, what? He's worried about if he goes bonkers. That's a typical thing that Elon Musk would say. Come on, man. It just cracks me up. Do people just wake up and listen to their first conference call for Tesla?
Does he take his bat and his ball, along with his artificial intelligence and robotics juggernaut, and go home? You think that Yul Brynner or Steve McQueen would just stop championing the villagers and go to another gunfight if they didn't get more compensation? The guy's already the world's richest man. Stick around, pal. Get the job done. Finally, none of the seven...
Once again, it has nothing to do with him getting more shares in terms of a bigger ownership stake. It's about voting power.
Been at the mercy of foreign competitors. But now Musk concedes that Tesla's facing dangerous competition from the Chinese. Quote, frankly, he ponders, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world, end quote. Musk does say that there could be a second wave of growth, maybe in 2025 with new products. He does have a terrific robotics element. And as he says, quote, if we execute very well, I think Tesla could be the most valuable company in the world, end quote. Sure, terrific. But a dozen other companies can say the same thing. I want the ones that can do it, not talk about it. Right now, the world's richest man is all hat, no cattle. As someone who is among the first to vocalize the Magnificent Seven rubric, I officially acknowledge now that there are only 6 left. A super six-pack. As for Tesla, time to move on. I like to say there's always a bull market somewhere.
Oh boy, so now they're switching it to the Super 6. Oh my gosh. Well, that's until one of the other stocks does bad. Maybe it's Apple next. Maybe Apple's going to get thrown out. I don't know. We'll see. We'll see. Somebody's going to get thrown out next, and then it's going to be down to 5. And then they're going to have to bring back in Netflix. Maybe they'll just swap out Tesla and bring back in Netflix like they used to have back in the day when it used to be. What was that term it used to be? Somebody remind me in the comment section. What was the term before Magnificent Seven, before Manga or whatever it was? What was the old term? Alrighty, guys. Appreciate you joining me. Thanks so much. As always, much love. Thanks for being subscribed to the channel. If you're looking to join my Patreon, pin comment down there. Join us in there and the Discord chat. Plus, get to see the moves I made here today and in future weeks. Much love and have a great day.